Hey everyone, how's it going? It's Russell Matthews here, and there has been a lot of news when it comes to housing in Canada. We had a new federal budget come out with some measures inside aimed to slow down the housing market. We had the Bank of Canada come out with new information on how they see real estate, as well as one of the biggest regulators of real estate saying, hey, potentially we're going to step in. So in today's video, we're going to go over what exactly was inside of that budget and whether or not it's actually going to have any effect on the real estate market. We're also going to talk about what the Bank of Canada said and whether or not they're going to step in, as well as the person that both of those people, the federal government and the Bank of Canada, is sort of looking towards saying, hey, maybe you should tackle this problem. But before we do, make sure to check out the links in the description where you can learn more about money and investing in Canada, or open up your own investing accounts to start taking your wealth into your own hands. And if you haven't already done so, make sure to subscribe to the channel, hit the notification bell to keep on supporting Canadian-focused content right here on the YouTube platform. All right, let's get into this budget and what exactly is going on here. First, at risk of oversimplifying, it's important whenever we're talking about housing to think about it from a supply and demand perspective, right? As supply goes down, demand goes up, house prices go up, and the inverse is the same as well. And now the government of Canada is actually trying to tackle the housing problem by looking at both sides of this. But whether or not it's actually going to make a difference is another story. Let's dive in here. This is the first section of the budget that we want to talk about today, and this is the one that has the emphasis on building more supply of housing and hoping to make an impact on the housing market by doing that. And it's in this section here called More Affordable Housing inside of the budget. And there's a whole bunch of different measures here aiming to increase housing supply. So right here we have Budget 2021 proposes to provide an additional $2.5 billion over 7 years starting 2021-2022 to the Canada Mortgage and Housing Corporation for money for building more houses through the Rapid Housing Initiative and more for the Affordable Housing and Innovation Fund. We have a whole bunch of programs like this aimed at actually increasing the supply. But now I've got to show you an interesting chart here that gives you a better idea on what this is actually going to do. And I'll zoom in here so you can get an even better view of it. So inside of this budget, there's a whole bunch of different measures here, like I just showed you. They're all a little bit more niche. Some are funding for building homes up north in the north of Canada. Some are for some low-income housing to be built. But all in all, they're trying to build around 35,660 new units of housing. Now, we actually have to change this number a little bit because 13,700 of these are repaired, but just for sake of easy math, let's just bring this down to 22,000, right? So because we're subtracting that 13,700 new units going into the market that are just repaired, not actually built, well, we're going to get to this number of around 22,000. For our math, we're going to do that. Is this 22,000 additional units of housing actually going to have an effect on the overall supply in Canada? Well, take a look at this. This is a rough graph of how many housing units are actually in Canada right now as we speak. These are projections from 2018, but it's probably going to be around this number. Let's just use a rough 14 million homes in Canada, right? 14 million housing units. Now, is this around 22,000 new supply being added to the market? Is this really going to have an impact on the overall supply in Canada and slow down the market? Well, if you do the math, it works out to about a 0.1% difference in supply when it comes compared to the actual overall volume, the overall amount of housing units in Canada. So likely not going to have a very big impact on the supply side of things. But what about on the demand side of things? They've actually implemented a new tax. The federal government is bringing in a new tax that could have an effect on the demand side. Let me show you exactly what I'm talking about here. In a minute, I'm going to show you some video clips of some responses from federal government officials that could have you a little bit concerned about the housing market here. But for now, let's go over this tax that's being implemented. And it's called a tax on unproductive use of Canadian housing by foreign non-resident owners. They preface it by saying, across the country, young Canadians who are starting to build their future are running up against sky-high housing prices. And here's the actual measure that they're trying to implement. Budget 2021 announces the government's intention to implement a national annual 1% tax on the value of non-resident, non-Canadian owned residential real estate that is considered to be vacant or underused, effective January 1st, 2022. The tax will require all owners other than Canadian citizens or permanent residents of Canada to file a declaration as to the current use of the property, with significant penalties for failure to file. So just to break this down into its simplest terms, they're putting a 1% tax on all real estate that is vacant but is held by foreign owners, right? Any foreign investors that are just buying up houses, buying up condo units, and just leaving them vacant, likely as a hedge against their own country's currency or a hedge against inflation on a worldwide scale. Okay, so we're starting to see here that the government's goal is to actually reduce the amount of demand in the market by implementing this new tax that should hopefully, in their eyes, start to see a slowdown of foreign investments, at least people who are holding those properties vacant. But will this actually have a different or make a difference on the demand in the Canadian housing market? Well, I think not really, right? So they're implementing this 1% tax, but you don't get taxed if the place isn't vacant, right? So it's very easy for a foreign owner to hire a property manager for far less than 1% of the property's value per year and just hire them to manage the unit and rent it out to somebody, essentially making them uneligible to be taxed this 1%, right? This is one option many people may go with. And also, if you're investing in Canadian real estate, likely this 1% tax isn't going to be a huge deal, right? If you share my beliefs about inflation and where that could be going and the potential asset inflation that we've been seeing with this huge run up of real estate prices, well, if that 1% tax is just a cost of doing business, well, then it's not even all that bad of an investment, even if you are taking on this tax, which I believe many people won't. They'll just hire a property manager to go in there and rent out the unit, right? Easy peasy. They're just eliminating that tax for themselves. So in my eyes, as well as many other analysts' eyes, the measures that are inside of this budget simply aren't going to do enough to move the scale when it comes to supply and demand to have any meaningful impact on what real estate prices are in Canada and their current trajectory. And here's what Chrystia Freeland said into response to a journalist who asked her a question that was sort of pointing this out, that they were being rather soft on housing and were not really doing much. Let me show you what I'm talking about.
Can you sort of explain that decision as to why you didn't go a little further in tackling this?
On housing, as you said, we have announced that we're going to go ahead with a tax measure, and that is a tax on non-resident, non-Canadian vacant property. The budget also includes significant investments in housing, because our view is that Canada is a growing country. Before the budget, OSFI announced a consultation, and we are following that very, very closely as well.
So Chrystia Freeland, the finance minister for Canada here, well, she points out a couple different things. She says, hey, we're implementing that tax that we talked about. We're implementing these things to increase supply. Another thing we talked about, both of which likely aren't going to do a whole lot in terms of the broad scale of the Canadian housing market. But she does bring up something different that you may not have heard of yet. It's called OSFI, right? She says we're monitoring the changes that OSFI is planning on proposing. Now, as I already made a video on this, but I'm going to do a quick breakdown on exactly what this is. OSFI is the Office of the Superintendent for Financial Institutions, and they're one of the largest regulators of real estate here in Canada. And they're saying for people who are putting down less than 20 or over 20% on their down payment for their mortgage, well, they're going to have to qualify for a higher stress test of around 0.5%. Now, without getting into all of the details on exactly what this means, essentially it means a 5% decrease in buying power for buyers. So if they could buy $100,000 or $1 million property before, once these changes take place, you would only be able to qualify for a $950,000 property. If it was a $500,000 property, now that you're going to only qualify for $475,000, right? So it's a lowering in the buying power. So she brings up that they're looking at this very, very closely. Now, a few analysts think that these OSFI changes could slow down the market a little bit, but far more analysts are pointing towards the idea that it might actually do more to heat up the market in some senses, right? Inside of these changes, and again, I've made a video on this, I'll link it in the description if you want more details on what exactly these OSFI changes are, but they've put a hard deadline on when this change is going to come into effect, sometime in June of this year, if it makes it past this proposal stage of this change being implemented. These are all fine details. But the fact that they have that hard deadline in June, well, last time we saw a change like this, we saw a huge run up in housing prices leading up to that deadline, because if you're a buyer and you're told, hey, all of a sudden you're going to be able to qualify for less, what does that incentivize you to do? go out and try even harder to buy that home, right? So we could see even more of a run up leading into that June deadline. And because of that, we could see even more fear of missing out, more speculation, kind of pushing up the market even more and heating it up in a further way as everyone rushes to buy a home before this deadline. And the reporter who asked her this question, well, she kind of calls her out on this, also noting that the OSFI changes are only for people who are putting down 20% or more, but there are a lot of people putting down mortgages with only a down payment of 5, 10, 15%, insured mortgages. We don't need to get into those details right now, but I want to show you this Chrystia Freeland response because she seems a little bit frustrated with the question and a little bit dismissive, saying, hey, this is not what I want to talk about when I've just released my big budget with my national child care plan.
I think it's up to finance to sort of change the rules on the insured side of the mortgage scheme. I mean, is that something you're looking at? We didn't see any measures on that in this budget either.
That's right. And when OSFI announced their consultation, we said we were following that closely. The consultation period is not up yet.
So when the reporter pushes back a little bit, Chrystia Freeland says, hey, I just told you we're looking at these guidelines that are going to be changed by OSFI, and kind of gives her a look saying, enough with this question, there's nothing more you're going to get from me here. So it's pretty clear that the federal government isn't really going to do anything on housing, at least in the short term, based off of this budget, and they're sort of just passing on the buck to OSFI, saying, hey, you deal with this problem. But what about the Bank of Canada? After all, the Bank of Canada, through their quantitative easing program, is the one that's manipulating interest rates and pushing them down to the lowest levels that we've seen in recent memory, increasing demand and creating this marketplace where it's incredibly cheap to borrow money, and as a result, that's going to increase demand for real estate as people are able to afford more and more with the mortgages that they're qualifying for. Well, what does the Bank of Canada have to say? Well, luckily they just held a press conference too, so let's dive into some of that information. Now, one of the main takeaways from this Bank of Canada press conference that was held last week was, well, they've changed their outlook for the future when it comes to when they're going to raise interest rates. Previously, they said, hey guys, we're not going to raise interest rates until at least 2023. Now they're coming out and saying, hey, things are looking a little bit better in the economy than we expected around 2022, halfway through that year. Well, then we might start to raise interest rates. They're sort of proposing through their monetary policy report, which is what this press conference was all about. Now, despite the fact that this press conference was about their monetary policy report, so many of the questions were all about real estate and what the Bank of Canada was planning on doing. Let me show you a clip from that.
Our concern, our worry is that, against a background of rapid price increases, people will extrapolate. They'll expect that those price increases will continue indefinitely, and they'll overstretch to buy houses. That would be a mistake. The proposal by OSFI to revise the B20 guidelines and put in place a minimum floor on the benchmark, that is a helpful proposal. And the reality is when interest rates are unusually low, there is greater potential for them to eventually rise. And so by putting in this minimum, that will help protect borrowers and lenders from overstretching. There's also a measure announced in the federal budget to put a 1% tax on vacant homes owned by foreigners. Again, that will tend to reduce speculation, and to the extent that foreigners are buying homes as an investment, it'll encourage them to rent those out, so that that will contribute to the supply in the market. Those homes are not taken out of the market effectively.
So what the governor of the Bank of Canada, Tiff Macklem, here is essentially saying is that, okay, well, we're starting to see people take on more debt relative to their income to buy houses, and when we start to see people stretching more to buy houses, then we start to get a little bit worried. And his response on how they're dealing with that, well, he doesn't really provide one on what the Bank of Canada is planning on doing about it, and that's fair. The Bank of Canada isn't actually inside of their mandate. It's not actually stated that they should even consider housing prices at all with their monetary policy. But what he does say is that, hey, look at OSFI. The same thing Chrystia Freeland said. Look at OSFI. We see those changes coming in. Well, that could actually do something to help. Well, we're not going to do it. OSFI can do something. And then he also points at the federal government's budget saying, hey, here's this new tax that they've just implemented, and that may increase or do something to increase the supply in the marketplace price and change prices. And then he also says that it's going to help the rental market, which I believe it actually will help more people get into those vacant units as they rent it out, but it's not really going to do anything to affect real estate prices. So we have this situation where everyone's sort of looking at each other saying, hey, they're doing something, they're doing something, they're doing something. We don't want to be the ones to really do anything about this problem. And I can almost sort of understand the Bank of Canada's position right now. They're actually kind of stuck between a rock and a hard place. Let me show you exactly what I'm talking about with this response from Tiff Macklem from that very same press conference.
There's no question, Greg, that low interest rates have made borrowing more affordable, and that helps people buy houses and increases the demand for houses. With respect to monetary policy, Greg, monetary policy, it's a broad macro instrument, and we really need to look at the needs of the whole economy. The housing market is an important part of the economy. The housing market is built into our projection. When we look at the whole economy, there's still at least 500,000 Canadians who are out of work relative to the employment rate before the pandemic. There's considerable excess supply in the economy. Right now, the economy needs our support, and we are committed to providing the support the economy needs to support recovery and get inflation back to target.
So essentially what he's saying here is that when it comes to the Bank of Canada's interest rate manipulating policy of quantitative easing, where they're buying a huge amount of Bank of Canada bonds to push down the yields on those bonds, which as a result lowers interest rates over time for all aspects of the economy, well, what they're saying here is that in the housing market, well, the Bank of Canada can't really look at it as if it's inside this bubble and they're changing the interest rates and it's only going to affect real estate, right? They really have to look at their interest rate policy with a broader brush, right? Look at it through a broader scope, because if they were to raise interest rates, well, that not only makes it more expensive to borrow for real estate, but it also makes it more expensive for businesses to borrow and for the government of Canada to borrow. When these businesses aren't able to borrow as much money as cheaply, well, that can, as a result, as it works down the chain, result in less jobs available for Canadians, right? And right now, we're not seeing a full recovery from the job losses at the beginning of the pandemic. So what Tiff Macklem here is saying is, hey, we can't just raise interest rates to slow down this housing bubble, because that would result in very human consequences of less jobs being available for these unemployed Canadians who are suffering right now. And this is really right in line with what the former Bank of Canada came out and said about a month ago, is that, and the Bank of Canada hasn't come out and said this directly, but because this guy is a retired governor of the Bank of Canada, well, he can be a little bit looser with his lips. And what he says is that, hey, we know there's this housing problem going on, but we would take a run up in housing prices and inflation of asset prices if it means that we can provide support to the rest of the economy. So right now, it seems like the Bank of Canada knows that this stuff is going on in the housing market, but they're just choosing the lesser of two evils in their eyes, right? They're going to see these asset prices inflate, but also by keeping interest rates low, maybe this is going to help out the broader economy as a whole, which is still struggling right now. But essentially, to sum everything up that's included in this video, we have this situation where each of these different bodies that's supposed to do some regulating of the real estate industry, well, they're all pointing at everyone else and saying, hey, you're the one who should solve this. The Bank of Canada is saying, oh, look at OSFI and look at the budget. The federal government is saying, well, look at the OFSI. We're just going to depend on them to make these drastic changes. And OFSI is like, hey, well, we haven't even committed to making these changes that both of you guys are referencing to. And with all of this, I just couldn't resist. I had to make this because this is really what it feels like right now. Everyone's pointing at everyone else saying, maybe you should be the one to handle this problem, and everyone's passing the buck to the next guy, but no one's really doing anything to slow down real estate prices, at least in the short term. And it's such an interesting situation, and we're going to have to keep watching it as it develops. Are we going to see real estate prices continue to rise? Well, it seems like nobody's really stepping in with some serious guidelines to suggest otherwise. So currently, I believe that over the next little while, we're going to see these prices continue to rise, unless, of course, there's some major event or some major change that we don't know about yet. But really, I am curious on what you think about all of this. Like, after hearing what the Bank of Canada said, what the federal government said, what OFSI said, what do you think is going to happen in the real estate market? Do you think that the federal government should have taken a stronger stance? Do you think the Bank of Canada should say, hey, we really need to quell this growth in the housing market and raise interest rates sooner than we expected, even if that means less employment, right? What do you think about all of this? I read every single comment. Let me know down below. I'd love to hear from you and hear your perspective, because it is such a constantly changing and interesting, at least to me, situation. So let me know down there what you think. And make sure to check out the links in the description where you can learn more about investing and saving more, earning more, all in Canada through the Canada Money Mastery Program, as well as links to open up your own investment account so you can start taking your wealth into your own hands. Because again, based on all of this news, it really seems like this wealth gap is just going to keep on stretching, and the people who invest in things like real estate, people who invest in stocks, well, those people are going to be stretching on the upper side of this, while people who aren't invested are going to be struggling in the future. At least that's my view on it. I think it's a negative thing for the future, but I think we need to recognize that it could be a reality and take care of ourselves. So make sure to check out those links. And if you haven't already done so, hit the subscribe button, notification bell to keep on supporting Canadian content like this being made on the YouTube platform. And with all that said, thank you so much for watching, everybody. I really hope this video has helped you out at least a little bit, and I'll see you next time.
This channel is supported by viewers like you. Thanks, channel members.